that we're going to move forward with this program on the business case of solar. This is a program that we've been put off twice, so we're really happy to see the good turnout at this program. Thank you all for coming. And I want to get started. I am Phyllis Kessler. I'm an energy lawyer at Duane Morris. And what I would like to do is, if we could first go around the room and have everybody introduce themselves. If you could just say your name and your organization, and then when we're finished, I'm going to introduce the panel. And start with Jean.
Jean Fox. I'm an adjunct faculty member of Columbia at the Energy and Environment Concentration, and a former commissioner and president of the New Jersey Utility Commission.
Paula Duran, solo loan credit manager, PSE&G.
Stephen Filler with Jewel Assets.
Monica Lamb, Sherman and Sterling.
John McCauley, Pico Energy Company.
Marshall McLean, I'm a lawyer with McCarter and English, and I'm also the president of the board of Grid Alternatives Tri-State.
Ernie Chung, I'm a partner at Blank Rome in New York.
Dan Resnick, I'm with Green Street Energy.
Jason Good, I'm with Economic Development Corporation.
Tim Hoffman, I'm with Watts Capital and Cleantech Open.
Michael Johnson Chase, I'm with Green City Force. We work with young folks from NYCHA and do energy efficiency and renewables, and work with Grid, in fact.
I'm Ralph Tejeda with Easy Energy Solar in New Jersey.
Erica Nandroni, I'm with Nautilus Solar, also in New Jersey.
Chrissy Haley with Jones Lang LaSalle, and I'm on their energy and sustainability team.
Benoit Vance, and I'm with Renew Energy.
Rachel Stein, I work for Solar One on behalf of NYSERDA.
Tim Meyer, I'm with Spark, head of business development for energy.
Nick Davis, AGRION and Grid Market.
Manish Nair, with Solar.
Thank you. Jonathan, I'd like to start with you, and if the panelists could not only give your company, but also just tell a little bit about your role within your company.
Great. My name is Jonathan Lee. I'm representing Wyndham Worldwide. Wyndham Worldwide is a global hospitality company. We run franchises as well as manage hotels and timeshare properties globally. I'm in the sustainability group, and what I've been doing personally over the past few years is developing a financing facility for Wyndham to implement energy efficiency as well as renewable energy projects across their portfolio.
Good morning, everyone. My name is Danny Patak. I'm a director at Energy Solar. We are a solar project development company established back in 2006. We operate primarily in the commercial and industrial space, providing solar PV solutions. In terms of the projects we work through, we develop rooftop solutions, carport solutions, ground-mounted solutions. We operate right across the United States, offering a turnkey solution for our clients. We're also quite agnostic in terms of the commercial solution we provide, so we don't generally favour whether it be a PPA or an operating lease. We like to work with our clients to get the very best solution for their business and their bottom line. So in terms of my role as a director of the company, I tend to do a lot of talking, a lot of helping. So talking with our clients on their existing portfolios and their planned solar project sites. A lot of project origination, a lot of technical feasibility, right through to assisting our project development.
Hi everybody, I'm Chris P. from Bank of America Merrill Lynch. I'm an investment banker covering the power renewable space, and we deliver the full suite of products from M&A to equity and debt. We've been very active recently. We've actually over the past 5 years doing the solar tax equity investments. Also, creating solar and wind debt products, such as the aggregation facility that we did for Solar City. We're taking different tax equity funds and levering against the cash flow streams plus tax equity. I'm also working on trying to securitize solar assets, especially in the DG space. And most recently, over the past 2 years, we've been working with the YOCOs, taking them public, and also working on various M&A projects, including the most recent of Life Sciences and Life Fish Link. So we've been pretty active across. It's been very exciting, especially in the space, working with all of you guys who are principals in these companies, trying to move the industry forward.
I'm Kate Shackford. I'm Executive Director of Grid Alternatives Tri-State. Grid Alternatives began in 2004. It was started by two engineers, Erica Mackey and Tim Sears, who wanted to make renewable energy accessible to everyone. We're now the largest nonprofit installer in the country, and we serve exclusively low-income homeowners. The Tri-State office was opened in February of 2014, and there are now 10 offices. There's also a Mid-Atlantic office in DC and one in Colorado, and 7 in California, where Grid actually runs the low-income program for the state of California. Our model is very unique in that we raise the lion's share of the installation, so there's no upfront cost to the homeowner. We also have a model where we train people to actually do the installations. We work with job training partners such as Green City Force, which is a marvelous program, where we do a week-long training, and then we choose 2 people, which includes a 2-day install. And then we choose 2 people to be interns for 8 weeks with us, and they're trained as team leaders. And out of that, it's very easy for them to get jobs in the solar industry. So we do both workforce development and making solar accessible to low-income communities. We want to diversify not only who gets solar, but also who works in solar. So we have an initiative also to put 1,000 women on the rooftops that has been funded by Sun Edison. It ends March 1st. We're 100 people short, but we're going to reach that in the next 2 weeks. So it's a very exciting model, similar to Habitat. We also do corporate work days as one of the ways that we raise the money. We have corporate national solar partners who donate most of the solar panels and the inverters to us. And we also involve students, sustainability clubs at different universities, raise money to become part of installations. We're going to have a solar spring break in March. Fingers crossed in terms of weather with UMass. And also there are colleges in Staten Island and up in Troy, New York, RPI, that are raising money to do installations with us. So it's one of the many ways that we diversify our funding so that the homeowner only doesn't pay it forward. They pay it between $2,000 and $4,000 over the life of the system, so that they have some stake in it, that they maximize their savings, so that they should see at least 50 to 75% decrease in their electricity bills.
I'm John D'Agostino. I'm a senior manager with the Connecticut Green Bank on the residential team. Man of many hats. I think on a daily basis, I'm the primary manager on our CT Solar Lease product. Anything from operations to marketing to contractor, customer, partner relations. Do a lot of digital marketing through our statewide Fuel Solar CT campaign, through our local Solarize campaigns. On-bill repayment, program development, low-income strategy development, so kind of multitasking amongst our finance teams, marketing team, kind of the interplay that actually goes out to our partners, our contractors, our channel marketing, our customers.
Thank you. I'm going to ask the first question, and then anyone in the audience, feel free to jump in with a question at any point. And Danny, I'm going to ask you to answer this one first, but if anyone else on the panel wants to add an answer from their perspectives, that would be great. What barriers do you see to entry in the solar market, and how do you think they can be overcome, particularly, I guess, for you from the commercial perspective?
Yeah, from a commercial side, there's probably 2 points that I can focus on. There'll be with any particular project, there'll be some physical site challenges that need to be dealt with. There's obviously financial challenges as well. So on the physical site challenge side, if a particular company is looking at doing a rooftop solar PV system, the roof itself is obviously quite critical to the success of that project. So the age, the condition, whether there's shading, whether there's HVAC systems, so warranties. So they all come into play. On the positive side, there's very good solar graphing technologies that we can sort of work around a lot of those issues. But they can make or break the project. So similar with ground-mounted solar PV projects, there's a whole host of barriers and issues that need to be worked through in terms of contamination, shading. Again, there's a whole host of sort of engineering solutions that need to be worked through to get a successful project. A couple of other things to note on the physical side as well. Structural, generally in the northeast, most buildings are going to be okay in terms of the structural load because they do have enough of a snow load buffer. Solar PV systems are actually quite light, so it's quite rare for a building to be excluded from a solar PV system because of structural integrity. In the southern states, structural integrity generally comes into play a bit more. So, and the final one on the physical side to mention is interconnection. Generally, it comes down to whether a substation can have capacity to take on a solar PV system in that particular area. So, so doing that pre-feasibility very early on in the piece is very, very important. Moving on to the financial barriers or challenges, it comes down to simply making the numbers work. There's a whole host of commercial options that are available. So it's a matter of making sure that the solution fits for a particular business, their risk profile, and their business strategy moving forward. Two other points to make on that. The first one is tax capacity and working capital. So in terms of tax capacity, if the company is looking at a commercial solar PV system, 60% of the cost of that system is covered by federal income tax grants and also, 60%. Sorry, I'll take it back a step. So if the company is paying federal income taxes, they will be eligible to claim 30% of the system as an income tax credit and 30% in depreciation. So that's an important consideration, and also whether the company has working capital. So final point on the financial side, and it is a bit of definitely a barrier at the moment, and that comes down to investment grade credit. So if companies are looking for a PPA perhaps, generally, the finance sector will require some form of investment grade credit. So that can be a bit of a stumbling block moving forward. A lot of companies do have great credit, but just not investment grade credit. So that's when things we need to be a little bit creative. So broadly speaking, we just recommend any company looking at solar working with a very experienced project developer to take them through some of these sticking points early.
Well, project from a low-income homeowner's perspective, first barrier, of course, is lack of capital to buy the system. The second is that the financing options that are available, they usually don't qualify for because the FICO score is too high. The debt-to-income ratio that's required is definitely too low. The interest rates tend to be high, so that they can't take advantage of the financing options available. Trying to think if there's a third one. And then a lack of marketing, so that a lot of low-income homeowners don't see solar as even something that's remotely possible. So the solutions to me are state incentives that are accessible to low-income people. We are monetizing the ITC by doing third-party leases where we actually prepay the lease for 20 years so that the maximum savings goes to the homeowner. And then the on-bill financing that's available, for instance, through the state of New York, they've lowered the requirements now so that the FICO score is low and there's 100% debt-to-income ratio so that low-income people can now take advantage of it. So I think it's very important to have some sort of a state low-income solar program. And one of the things that GRID is working with nationally is to try to encourage that there be a federal low-income program so that solar will be accessible in states where there are helpful.
The one to quit board.
Anyone else on the panel want to comment on barriers?
I mean, I'll turn it.
part of what Kate mentioned, I think Mr. would echo, human resource issues. Danny and I were talking earlier, just the difficulty in finding skilled labor at whatever level of the project that you're trying to implement. One of the things we see in Connecticut on the residential side is we have a number of small installers that have been in the market for a number of years, and they're really facing challenges trying to scale, grow, and make their operations more efficient. So that's a commitment on their part that they're hesitant a little bit to make. But then finding the way to take a small business and really scale up to a size business, they're finding to be a challenge to operationalize. And then with a number of the large installers, projects get lost in the shuffle with trying to really get into the market and enter the market in a big way. And so we see that there's a kind of a long timeline between the point at which the customer decides to go forward with their project and when that project is actually implemented. And there's lots of opportunity for miscommunication. And so customer complaints can often be an issue, which causes reputational risks. So I think when you have a really vibrant market, there's lots of challenges both on the operationalizing your own human resources, but also making sure that your reputation is intact as you scale to meet the challenges of that market.
I mean, I'll make one point. I mean, I think one of the things that we see is with a lot of the big developers who've been in the market, like a Solar City, they've been in the market for, they were founded in 2006, right? So they've been in this business for now almost a decade. And, initially I think the utilities were were unafraid of this business, right? And so because the states had RPS in place, they said, all right, well, we're going to allow people to have solar, and Solar City innovated, obviously, way for people to have free solar, right, without any upfront payments. And so now I think what we see is that utilities are taking longer to interconnect or net meter these systems. And so, one of the barriers I would think is how do we, I mean, not myself, I mean, I'm on the financing side, but, I think how do people in the industry work with utilities to make sure that there's a solution, right, for both the solar companies and the utilities, because if you don't have net metering, right, solar doesn't become profitable for customers, right? I mean, you have to sell some power to the grid so that the grid can offset your cost, your electricity cost, that solar is profitable for you, so that you do have that savings over a year or 20 years, right? So I think that's an important point, that all of the people in the industry have to sort of start to think about and see how they can work with utilities to make sure that there's a win-win for both sides.
Just speaking for Wyndham and a corporate entity, I'd say from my perspective, there really are no meaningful barriers. Aside from project economics, getting things to pencil out, intricacies of interconnection, there's really nothing stopping the market. I think one barrier that probably is still out there is there's this inertia. There's a psychological barrier to really embracing PV. The truth is there isn't that much urgency in the market to switch a commodity, an energy commodity that's not a meaningful part of your cost structure. So with that, in the absence of that urgency, it's really a matter of preference. So your corporate culture, how you view what you want to do for an energy buy, that's really the most meaningful barrier now. And winning that argument, which I think is occurring, is what will cause the market to grow.
I do think that the workforce development is a significant, could become a significant area. The industry is growing by 20% a year, and what we're hearing from solar companies, they're constantly calling them. They have new team leaders, so they're looking for people that have some sort of rooftop experience and who've proven that they have an aptitude, because often they're hiring people who they haven't been athletic. So I think an encouragement in terms of workforce development is very, very
Just going back to one of the things that was said with respect to net metering, what I've been hearing is that the Public Service Commission, well, this part is actually the case. The Public Service Commission in New York has capped the amount of net metering that is required in each individual investor-owned utility. So, and they actually recently increased it. It was previously 3%. Now it's up to 6%. But at the same time, they have been signaling, I haven't heard it directly, but there's been some talk about that they may want to ultimately phase out net metering, and particularly with residential systems where people aren't home during the day to use the power. I'm wondering a couple of things. One, how would this impact the development of solar projects in New York State? And two, is anybody participating in the New York REV proceeding and putting focus on net metering as an issue? Or looking at what might be a good alternative to net metering?
Certainly GRID is at the table in those discussions. And we're very adamant that net metering needs to be continued because it would be very, very detrimental to residential solar. Making it economically feasible, and certainly for our clients, the bottom line of cash flow, it would be devastating. So, but I think they're going to come up with some sort of net metering in these discussions, because I mean the governor's putting $5 billion into clean tech and a lot of money into New York's Sun programs. So I think there is a commitment to, at least for the foreseeable future, to continue with some sort of net metering. So that's certainly what we're pushing for with a lot of other stakeholders.
So I can say from the investor perspective, right? So when we go out on the road with, IPO companies, or for the yield code all the way to, obviously for Solar City and Vivint, and I've worked on most of all of those. And so when you go out and talk to investors who are going into these IPOs, net metering is a big issue, right? I mean, for Vivint Solar and for Solar City and Sunrun type companies, if there isn't net metering, the economics won't work, and then banks like we won't want to finance. We won't do tax equity. We won't do that, right? And so net metering is a big component of making solar affordable for residential customers. But then when you talk about utility scale, obviously you don't need net metering for utility scale. The biggest problem I think with utility scale with solar and wind is that you need a lot of land. And in the US, utility scale projects are on decline because PPA prices are coming down because of, utilities always have a lag. Like commissions always are at a lag because they're looking at gas prices, that used to be $12, $15, now they're, at $3. And now utilities are saying, or commissions are saying, well, why do PPAs have to be at $150 that they used to be in California when gas prices are this low? And so as PPA prices come down, utility scale projects are going to be less profitable, so people are going to be less likely to finance those projects. And because we have less land for big utility scale projects, it's going to be harder to find sources of land or places to put big projects with proximity to the transmission lines, right? So then you say, okay, well, where are people going? It's C&I and Resi. And C&I and Resi, if you look at all the forecasts, are the fastest growing in the solar space, and so obviously there's not going to be DG wind yet. I don't see it, but there are people working on it. But for solar, if C&I and Resi are the fastest growing, and it's fastest growing because especially in the Resi space, people like we're paying high prices for electricity. So if these companies are competing against the utilities that are 20 cents power, and the contracts are 15 cents, it makes a lot of sense, right? I want solar because I save money. So I think if net metering goes away, I would think that the industry is going to be stepped back. Obviously, there will be ways for us to make things cheaper, and that's the developers' jobs and the companies' jobs to bring down the cost of panels. But without net metering in the foreseeable future, I don't think the cost structures are coming down fast enough to be able to meet that, sort of that balance.
I'd say without net metering, a lot of projects just wouldn't happen. And I personally wonder this is a personal opinion, why it's even an issue. I mean,
utilities.
It's the utilities playing their trump card to say, hey, we don't want a lot of your volatile energy on our system. And I think at a 5% rate, I mean, I don't know how much Germany has online, but they got a lot more than us. I don't know why we can't figure it out. So I think this whole net metering issue is, the responsibility for solving it is really on the regulators. They have to come up and step up and say, hey, you know, you're the utility, you deal with this, we got smart people, you should be able to figure it out. Because without net metering, when you take net metering off the table, at the project level, just doesn't work. And the economics aside, just the project development discussion without net metering is really cumbersome, because you need to figure out how your solar system interacts with different kinds of tariffs. Because generally, if you don't have net metering, you might get LMP pricing, so like wholesale market pricing for power that you export. Of course, you're not going to give your power away for free. Figuring out how much you're actually exporting versus how much you're saving versus the full utility tariff, that's a very difficult exercise to do. You need to have interval data on a daily basis. You need to develop a daily profile over a period of time. Seasonality is a factor. So you have to do potentially a 6-month or 1-year study to really understand the economics of one particular project without net metering, because you have to deal with the difference in tariffs. So it not only does it just fully limit the overall market, it slows down the project process tremendously.
Yeah, no, I'd agree. In terms of the regulator stepping in to basically draw a line in the sand on net metering. It's stepping back. I mean, the key reason for solar and distributed solar is states are realising that they need more distributed generation, for energy security and energy balance. You have states like Massachusetts where 70% of their gas, their electricity is generated by gas. So they can't get enough gas into the state. No one wants a pipeline through their farm or through their front yard. So that's one of the key drivers, for solar at the moment. And even in that state, there's still this discussion around net metering, which shouldn't really be happening.
Yeah, we did a project, or we're looking at a project in Hawaii that is generally a full net metering state, but one particular island, Kauai, is run by a cooperative, and they have 2 different tariffs. So they have a tariff for, you get a full offset for stuff you produce and consume behind the meter, but then if you do export into their system, they only give you their wholesale rate. And just trying to understand that versus like the PPA price that we were being offered by a developer took a lot of time. And I'd say, again, going back to my point, it added so much unnecessary complexity to understanding this project. And even when you think you understand it, you always have a layer of residual risk, because you have to make projections as to what you think your consumption is going to be, and it's an instantaneous kilowatt hour. It really adds a whole layer of nonsense that you don't need on a project, because there's so much other things to talk about.
I'm wondering whether anyone here at the table has a good response to a utility when they say, what you're adding your intermittent power on our system is destabilizing our system. Have people at the table dealt with that issue, and if so, how are you addressing it?
On the project level, it usually comes up during the interconnection process, and the utilities have the ability to say that a circuit is full, can't support any more power. So it's hard to argue with the utility in that position, because they are the grid operator.
It's pretty black or white. So we've had great projects come up that simply can't go ahead because the local substation can't handle the balance of power. And they'll say, well, we've got this substation slated to be upgraded in 2016. Happy to do it for you now if you pay us $3 million, and then the project doesn't happen. So.
Do you ever hire consultants to take a look at that to see whether they're actually whether that's actually correct?
We have pretty smart engineers that check what they're saying as well. There's I don't think there's too much recourse that you can have. So they're pretty much the law, I think.
Right.
Are you guys looking increasingly at stacking on distributed storing to kind of smooth out some of these?
In terms of the commercial space, storage is getting close. The technology is great. It's coming down to how commercially viable it is for our clients to want to look at it. So we're probably still just a couple of years away from that. So
it's Hawaii and California, they're getting great market.
They're coming along quite nicely.
Hawaii's kind of a canary in the coal mine for ego claiming their grid's overloaded.
Yeah, higher cost of power in those states is helping that equation as well. So.
I mean, if you look at Germany, right? Germany is a great test case, because Germany has had over a 5-year period a lot of renewables getting into the grid, and if you look at peak hours during the day, I think Germany, some forecasts say it's like almost 40 to 50% of peak load power is generated by renewables. And what that has done is caused a lot of these German utilities to lose a lot of money. So RWE, E.ON, I can't even pronounce it, Battenkraft, or there are a bunch of utilities in Germany that have lost a lot of equity value over a 3 to 5 year period, and that's forced them to change their business models. Right? So RWE and E.ON have announced that they're creating a bad utility, a good utility. The bad utility will consist of the generation assets like coal and gas and the like, and then on their good utility, they're putting in more of their distributed and transmission and distribution businesses. And I think utilities have a really good argument to say that, hey, we built the transmission system, we built the distribution delivery system. We should be paid for what we've created. And the solar industry with distributed generation is coming in and sort of disrupting that. And so I do see, because we talk to a lot of utilities, and we do see a lot of validity in that argument, right? So in Arizona, they've created a fixed charge. I think they came up with $5. It's obviously hurt the industry. Solar cities and the other solar companies have been hit pretty hard by that fixed charge. And so, again, I just go back to it's a balance, right? There has to be some sort of compromise between the industry and the utilities to come to some sort of agreement on how do we make this a win-win for everybody. Maybe it's not a fixed charge, or maybe it is, right? Or maybe utilities need to start doing this business on their own, which you're seeing with some of or at least one Arizona utility doing so. So, I do think there's going to be a change, and one of the things for the industry advocates to do is to really have a dialogue with the utilities, right? I mean, storage is an option, but storage, you said a couple of years. I would think 5 years away. Right now, it's like $2,000 per kW or something like that. That's what I'm hearing. And with Tesla maybe bringing in their own technology, they can probably bring down the costs. But it's still many years away before we get to a storage period where people can be off the grid.
Yeah, look.
5 years.
I think it's probably a couple.
So, what companies are creating storage technologies that are viable at today's power? I guess that's my wonder.
And you're talking behind the meter?
Yeah.
Okay, I'll give you a list.
Okay. There's a couple that are operating now that are starting to begin. But look, that and that aside, you make a good point. The solar industry, we need to, and we certainly do. We're not trying to be the enemy of the utilities or anyone. We're trying to work collaboratively with with them. We don't want to be seen as the new boys on the block, trying to muscle our way in. So there's certainly more room for, it's a work there's definitely room for more, collaboration on both sides.
Yeah, I think when you think of the frequency disruption of intermittent power sources and that whole argument and how it factors into limiting net metering, it's important not to conflate the two issues. I mean, net metering, what's being argued on the state level, is a policy decision. Frequency fluctuation on a particular circuit, that's a technical issue. So that's something that comes up during interconnection. The utility should have some say in, you're going to disrupt the circuit. But to say that that's going to exist in all the circuits, no. So what should the net metering cap be? If a particular circuit can support 40% PV or 60% PV, why isn't that the cap on a policy level? let's fill up every circuit as much as we can. It shouldn't be 5%, which is literally a number that somebody probably just thought up.
I have a question for Chris and John. What impact do you think the reduction in oil prices is having on this industry, and do you think that this is a short-term blip or something that we're going to be looking at for a longer period of time?
Yeah, so I think from looking at just weekly and monthly market data, it hasn't had much of an impact at all, at least on the residential side. I think the market is on a certain trajectory, and it's very difficult to cool the market down. Obviously, oil prices and renewables not necessarily perfectly linked. In Connecticut, the only real connecting factor would be like peaking plants or oil peaking plants, but generally speaking, I think the market in Connecticut grew by 50% last year in the residential side, and that trajectory is looking to accelerate this year. So we were speaking earlier about, or maybe it was Keith and myself were speaking earlier, the clustering effect. So there's a question of why do people choose to go solar is because your neighbor went solar. So when you start having these clustering effects, you start reaching critical masses and critical momentums. That is part of the it's part of the conversation. And I think at the community level, we actually find in some of the campaigns that we run a campaign for 20 weeks. A certain number of people decide to go solar. We go back with a very, very different campaign that's not even geared around solar, and people are talking about solar. So we went back with an energy efficiency campaign, and all anybody wants to talk about was solar panels on their house. So we're calling this a solar tail. And so I think you find is when you have this momentum that the market in Connecticut is experiencing, it's a part of the conversation, and it's not just that it percolates laterally, but it actually percolates after that as well.
Yeah, I think we've seen some correlation, unfortunately. Last year, a lot of the solar stocks, all of the panel manufacturers, and even the yolcos were impacted somewhat by the price of oil. As oil came down to like $50, you saw solar stocks losing a lot of equity value that they gained over the period of mid 2013 through the 14 period. You saw a lot of solar stocks. I mean, Solar City went from $8 stock to all the way up to $80. Now it's around $50. So that's just one test case, but you've seen a lot of solar companies perform really well, and then when oil prices came down, sliding, solar prices came down too. When the yolco stocks came down, utility stocks came down too. But then this year, you've seen some decoupling. I think people have realized, investors have realized that the old correlation between solar and oil is wrong. Oil is only 5% of the global electricity production. So only in the Middle East do they really burn oil for electricity because it's free for them, right? So, so the decoupling has happened because investors have realized that there is no logical correlation. But I would think that going forward, you probably will see some irrationality. Probably, who knows? Investors are always looking for something to be concerned about. So, unfortunately, there is a correlation. So my answer is there is a correlation. It's gone now, and it's all up to solar companies to execute and show investors that, for instance, like a Solar City, I can put 1,000 megawatts of solar on the roofs. That's their forecast. It can do that. If Vivint can do the same, and earnings are good with solar companies, investors will say, yeah, it doesn't make any sense that oil should have any impact with solar stocks.
So I can actually want to add that that's a really good point. One of the things that I should go back and actually look at is what the momentum has been in our oil-fired homes in Connecticut, because that would actually, with the decrease in prices, that would actually affect.
That's heating oil.
That's heating, yeah. So it'd be interesting to see if there's any kind of irrational cross reference.
For Wyndham, oil is still a pretty relevant measure for island economies where they have their own little grid. There's a lot of those economies.
Hawaii uses a lot of oil.
Yeah, Hawaii, the Caribbean, all those places. Yeah, they've had a huge benefit over these past 6 months. So we've had to readjust our models and recalibrate the financial assumptions for projects that we have located there as a consequence.
But don't they hedge that in advance, and so maybe there is a lag where if they're hedged?
You would have imagined that, but surprisingly fluid market
Yeah.
in some of these island
I
economies.
mean,
Yeah.
they do hedge, and there are islands. I mean, I'm familiar with what's going on in the Virgin Islands, and some of the islands are moving over to LPG and LNG in order to reduce those costs. But it's still, because everything's imported, it's still significantly higher than some of the prices for solar projects in those islands.
And that's had an impact on solar development because those are the same environments where you have the greatest paybacks. The shortest paybacks.
And on the commercial side, we're not seeing any impact at all. You know, there's, especially the northeast, but particularly the mainland US, there's not a lot of the power generation comes from oil, so we're not seeing any impact at all.
Jonathan, since you're the, I would say you're our end user representative on the panel, I think it would be interesting for the audience to hear what the factors are that your company looks at when deciding whether to employ on-site solar at a hotel or at one of your timeshare locations.
Yeah, as I mentioned before, project economics have to work. So there has to be a value proposition for that particular purchase. But by and large, I'd say the motivation really stems a lot from our corporate culture. So Wyndham has a sustainability, corporate responsibility initiative. It's a large part of our long-term strategy. It's a pillar, one of the pillars of a long-term strategy. So our carbon reporting or reporting on social initiatives, I would say that's a big motivating factor. You could look at the project economics, and by and large, you could get things to pencil out. You know, projects that pencil out within 5 years, they look good. Truth is, in reality, relative to other opportunities that the company might have, it's a so-so project. So it would normally just be tabled. But why do these projects go ahead? Because there's this other sort of intangible layer of, yeah, we should do something like this, and it works. So why don't we do it? Especially if you don't have to spend our own money. So, exactly, yeah, somebody else pays for it. You just commit to purchasing power for 20 years. For some reason, the market thinks it's less risky than buying a power station.
Can I just ask a clarification question? Is that because you're using PPAs? I mean, I just want to understand what you just said.
Wyndham right now is primarily using PPAs because all the considerations of do we want to be investing corporate assets into like a power station? Is that a core competency? Wyndham has a strategy of being asset light. So a lot of the properties that we manage, we technically don't really own. Ownership lies typically with somebody else. So likewise, for an asset such as a power station, we would want to have a third-party owner. So a PPA becomes the desired vehicle. We've looked at leasing as well, but the tax advantages of a PPA, because Wyndham itself doesn't necessarily have a tax appetite, and those tax dynamics flow down to the project basis, on the project level. Sometimes those entities don't have a tax appetite either. PPAs are what we're looking at. But going back to what I was saying before, it's like you have good project dynamics, good project economics. You want that to work. The real motivating factor, what pushes you over the edge, I'd say in my experience and what I've seen from Wyndham, really is sort of this intangible desire to do it. It's a cultural type thing. I think the announcement that Apple made the other day with First Solar, an $850 million solar farm, hopefully that has an impact of changing corporate mentalities as to why companies want to do this. Apple, they have money to burn, but not every company's in that situation. But the reality is the financial community is there to support you if you want to do that. If you want to do it, that's the key thing. If you want to do it, I think companies that have that culture, try to find a way. Try to find a way.
I have more questions, but really, if anybody else around the table wants to ask a question, I don't want to monopolize that. Yeah.
This question is for Kate. You mentioned about, well, first of all, I should say, that you do stuff in the New Jersey market. Yes, okay. When it comes to the SREC, what happens to that within the projects that you do? And who keeps
it? Whether
it?
we're using a third-party model or not.
I got it.
If it's a system that Grid puts on where the homeowner owns it, we're able to monetize the SRECs. But the third part of the SREC goes to the company that we're working with.
Got it. Okay.
But yes, we do absolutely do work in New Jersey. We started with a launch that worked with victims of Hurricane Sandy and did some in Asbury Park, and we've since done installs in Eatontown and Union Beach. The next place we're going to work is in Camden because they contacted us and said, we want to work with you. And so we're actually in conversations with PSE&G in terms of how we can help to make the loan product accessible to low income, and also are talking to their foundation to support some of that work. But we definitely would like to expand the work we do.
Oh, yeah.
Well, I mean, you mentioned that too, that you offer loan products. Some of the trouble that I have sometimes in trying to sell a deal is somebody might have income-wise, they got good jobs, but for whatever the reason, their credit score is just below where it needs to be. You know, right now, obviously, because we have 2 more years of the 30% tax credit, I mean, I noticed that there are banks coming out and offering these programs. I mean, we have programs, a lot of them where we're at 2.99% and everything else, but the credit score has to be like 720, 730 to get that. I mean, do you offer any programs where somebody come in at a 625 or? Yeah, I think people want to pay for it. They don't necessarily want it for free, but they want to have the opportunity to do it. You know, so.
Well, we don't have a loan product.
Okay.
We work with the existing loan products. I mean, we're beginning to explore the Grid, whether we could do not a loan, but some sort of a pay it forward where they would do a contribution. But for instance, in New York State, the beyond bill, they have dramatically changed the requirements because they found, because the community-based organizations who were mandated to work with homeowners whose incomes were 60 to 80% of the area median income, none of them were getting approved. So CBOs were going, well, you have to change your requirements, it's just not working. And the NYSERDA just announced that their loan program is only going to be now for low and moderate income up to 80% of the income. So the FICO score, I believe, has gone down to 570, it might be 540, don't quote me, I have to look at it again, and 100% debt to income ratio.
Okay.
So now it's a viable loan product for homeowners who otherwise, both for energy efficiency upgrades and for solar.
See, I have to come up with credit.
So that we really can get some sort of homeowner stake in the game, but it won't change. It'll just reduce somewhat the savings that they have on the electric bill, but they won't be putting any money, any more money in the game than they do.
Okay, you mentioned something in the state of New York?
Suggestions, I know about the on-bill.
Thank you.
We have someone here from the policy from the PSEG loan program, actually. Sorry to put you on the spot.
That's what we were just talking about.
Maybe you could share something about it.
Yeah, I mean, I'm the credit manager for the solar lending program, and you know, we are in, talking with Grid Alternatives. Traditionally, we do lending on the residential side, but you know, our credit standings currently are more in line with what the residential mortgage industry is. So, you know, obviously there is a whole sector that is not being utilizing our solar lending program at this time. And for those who are not familiar with how we do this in New Jersey, we finance somewhere up to 40 to 70% of the cost of the solar system. We do it for both residential and commercial and for landfills. So the residential, of course, is an important part of the solar lending, and it gets repaid back in SRECs. And so we take the risk out of the SREC by locking in a price that's bid at with our solicitations. So if anyone wants to know more information about a solar lending program, I'll be around after.
There was the answer to how utilities keep clients.
That's a great program. Just wanted to make a point on something that Jonathan mentioned early on why companies decide to go solar. With our clients, we find that probably 90 to 95% of their decision making is really just centered around the project economics. Because, if it's space that is not otherwise used, might be some ground space or some roof space that you're not using for anything else, that can make you some money. So that's pretty much most of the reason why companies do it. It's a bit of a no-brainer, particularly in the northeast at the moment. Solar is very, very profitable, getting fantastic returns for clients. So it's a good generator for.
Yeah, I mean, I didn't want to give the impression that the Wyndham's only doing it just because they have a social responsibility mission. The projects do have to pencil out. But, yeah, I mean, we are in the business of making money. It's people, planet, profits. But one thing to consider is that Wyndham has been getting a lot of third-party recognition for their efforts. They're a member of the Dow Jones Sustainability Index, which is a globally recognized index, and it's had very good performance. As a public company, Newsweek has recognized us as being one of the greenest companies in America. And we also have our eye on regulatory initiatives that could have an impact to the industry going forward. One in particular that we've been playing a role in is the SASB initiative. So SASB, the Sustainability Accounting Standards Board, is developing a set of standards which will require public companies to include in their 10K various risk disclosures about exposures to carbon, social responsibility metrics, exposures to social change. And so there are specific measures within the hospitality industry that they'll be promulgating as well. And it's gotten some traction with the SEC. So there is the potential that all companies that are in the public space will have to have the capability to have these disclosures generated, and given that you're going to be disclosing these eventually in the future, it's better to be in a position of being a sustainability leader, and that's part of what drives the Wyndham strategy.
Yeah, no, as well as delivering to the bottom line, that a lot of companies do just leverage those other benefits in terms of attracting more clients, more customers, better suppliers, and just overall what it does for the brand. So there's a whole host of other things obviously to focus on.
One of the obstacles that we see, particularly in the non-utility scale space, is that the smaller deals, is that either tax equity is not available for deals of such a small size, or the transaction costs of putting something like that into place are prohibitive for smaller deals. And I'm curious if either in the panel or some of the developers here have found practical solutions, or how they've dealt with that issue. I know there was a lot of talk about aggregating deals, and that was sort of the holy grail, but I'm not sure actually how much of that has been successful in practice.
Yeah, look, I can say on the commercial side, that's definitely a gap in the marketplace at the moment. As an industry, we need to work better on, providing, PPAs and operational leases to smaller commercial facilities. You mentioned that there is a move towards getting some of this aggregation going, and certainly as an industry we're pushing it as hard as we can. But you sort of need to work hard to get a bunch of these smaller sites together and get them sort of packaged up. So it is possible, but it's harder to do. So.
We actually do offer PPA financing for small to medium scale commercial projects between 100 kW up to a megawatt. I don't know if that's as small as you're talking about. But we also, for things even smaller, sometimes we do aggregate. Somebody will have a portfolio from a company such as Wyndham. They got a ton of projects that maybe don't qualify up to 100, but you can group them in, get a similar contract for all of them, and it makes something in the 30 to 50 kW range possible when you can kind of get a whole bunch of them together.
Are there providers of tax equity that sort of are?
We use internal capital for all of our projects. So anything that kind of works out and the numbers make sense, we're ready to move on.
Yeah.
Just changing a topic a bit. About soft costs, how much of an impact on projects going forward are soft costs? They seem to be pretty large in some arenas. You know, like the lawyers and stuff.
Yeah, definitely. Look, it's something we're working on constantly, you know, just to be competitive. Particularly in the commercial space, you know, every site and every facility has its own different set of challenges that just do take time. So probably as a percentage in the commercial space, in the percentage of soft costs as opposed to residential, a significant more. So, you know, again, it's just very much a work in progress. You know, the industry and companies within the industry are trying to work together to, you know, to try and standardise it as much as we can and get those costs down and be as competitive as possible.
Yeah, I've heard the soft costs issue discussed in two different contexts. One, I guess primarily in terms of the soft costs of installation, like interconnection studies, things like that. But you're right, there is a huge burden of soft costs for third-party finance projects with attorneys. Wyndham's addressed that primarily by hiring somebody to develop form documents so you can develop a repeatable solution that you could then roll out across a portfolio. So not every company has the capability or the opportunity to do something like that. But to the extent that you have a widely available form that has standard terms, which I think was something that Tioga Energy had developed and disseminated throughout the industry a few years ago. Actually, our PPA provider presented us with a form PPA, and I happen to know that it very closely resembled the publicly available Tioga Energy PPA contract. That's important, to develop a repeatable solution that you can do over and over again. If the industry had gelled around that, like had a form lease or a form PPA that literally you just had to enter your name at the top, that everybody knew were the same terms, I think that would help a lot, because the attorney negotiation can be very...
Or does any place have that now?
Well, in New York State, in terms of permitting, there's a unified solar permit that is actually CUNY sustainability emphasis, and funded by NYSERDA to try to get it adopted by all the small communities upstate and some of the larger cities. I think they're now up to between 70 and 80 municipalities that have adopted it. So that should help to bring down at least the costs of the sometimes very complex permitting. Unfortunately, New York City is not yet.
Permitting is where I've heard most of the issues landing around soft costs, and that's because there's permitting at different levels, so that you're not just dealing with local permitting, but you're also dealing with state permitting and sometimes county level permitting. But I don't know what experience the panel has, but what I've been hearing is that one of the big pushes with the New York Sun initiative is to make an effort towards reducing soft costs, and I'm interested to hear what experience anyone, either the panel or in the room, has had with that.
I think one of the things that also is needed in New York State is in terms of licensing. In New Jersey, there's one license, a statewide license. It's not the case in New York. So every area we go into, there's a whole other issue in terms of getting your licensing, and not only, of course, the home improvement contractor and the home improvement contractor salesperson, but also the electrical. So we end up working with electrical subcontractors because it's just not viable for us. We have the electrical contract in New Jersey, but not in New York State, because there isn't one. So every place you go, and it's different. It's 50. You have to have 15 years experience in Westchester, 10 years in New York. It's just it's really I think another impediment in terms of
Yeah, I can mention I guess a number of points on the permitting case. Exactly right. You have this incredible variance throughout the state of Connecticut of local permits. So one of the things that, as part of our DOE Sunshot grant, we're trying to do is have that conversation amongst municipalities to make sure that they understand. Look, you're charging $500 for a solar installation permit, whereas your neighbor's charging $50, and they have a standardized process around it. Like, that's good for you to know, and we should work to streamline that between municipalities to help facilitate those projects for installers. In terms of soft costs generally, we have our local and somewhat regional Solarize campaign. So I mentioned this earlier, putting excitement around a limited window of time that you can have discounted pricing allows the contractor access to those leads and allows the customers to have the opportunity for discounted pricing. So it's, obviously it's a limited framework, but as we've noted, there is a solar tail, or Solarize tail as we're calling it, where people are continuing to have a conversation well after the campaign has ended. The other element that we'll touch on, we performed a solar customer segmentation analysis in Connecticut that just came out about a month ago. We took all the data that we had on customers in Connecticut that is on solar from 2004 to around 2013, cross-referenced that against present customer data, and actually, we're able to see, okay, well, who is doing solar in Connecticut? And we did a webinar on that and have the presentation available on our Go Solar CT site. What we found is probably wouldn't surprise a lot of people. You have your mainstream solar customer, I think we call them solar homes. Certain higher income levels tend to be suburban, 45 to 55, kids in the home, that sort of thing. Have certain proclivities, activities that they prefer. And we actually found in Connecticut, we came up, there was a segment that was unique outside the normal nationwide customer segment that we call premium Yankees. A little bit older, 55 to 65, lower income, more emphasis on self-reliance, self-sufficiency. Very different customer profile than your mainstream solar customer. And so this is an opportunity for salespeople and installers looking out to try and acquire jobs to target their messaging. You don't want a certain type of messaging going into a certain type of market if you know that that market is comprised of a premium Yankee versus a solar home. So we're trying to arm the industry with this sorts of strategic data and strategic analysis to help them understand that just throwing free solar out there isn't going to resonate with certain types of customers, whereas it will with others.
Yeah, I think that's an important part of the dollar per watt cost side, right? With companies that are trying to find those customers, I think customer acquisition costs are such a big part of the residential solar business that, what companies are doing are literally knocking on doors, and that's adding to, the expensive cost structure, especially for resi solar. And so if you can, have that kind of data disseminated across the space, especially with the mom and pop stores, right? Or the mom and pops who are, aggregating the solar customers and selling it to a company like Sun or some other company that has that access to financing. That'll be huge for the industry, because I think at some point, we're going to get beyond, or we probably are beyond like the early adopters of solar. And once you get into the next stage of who will adopt residential solar, rooftop solar, are you going to be able to entice them with the cost or the proposition, right? Because 20-year solar is, nobody really signs up for anything. I don't think any of us have ever signed up for anything that's 20 years, right? You buy a car, it's 5 years. Who does 20-year contracts? And so once you get beyond the people who are willing to do that because of other reasons, or social reasons perhaps, where are we on the, I guess like on the acceleration scale?
In terms of customer acquisition costs for us as a nonprofit, where people, our model is that we work with community-based organizations that work with low-income homeowners. So they have the trust of the community. Most of these homeowners have been done many times by contractors. And so they do initial reaching out to, first of all, they can identify homeowners, for instance, who have gotten a loan or grant for them to replace a roof. And they can give us addresses. We just look at Google Earth so we see whether it's positioned right so we don't raise expectations. And then they do not the individual outreach in terms of knocking on doors, but really giving us a list or hosting a meeting with people so that we can go in and talk to several homeowners at once, and then we do individual follow-up. This is a nonprofit, we have an outreach team that's very small, and we just think it's the best way anyway to build trust and to get our image out into a community that has been hurt many, many times by the fact that everybody knocks on their door. So it's one way that we keep those costs down. Build trust.
I don't know how many of you have heard of Block Power, but they have that exact model where they sort of rely on community-based organizations that have the trust of the community.
Yeah.
So looking at the hard costs, I'm curious what you think of, have we sort of reached a bottom here, especially as we start looking at anti-dumping and consolidation in inverter industry and so on. Is that component going to get down? And where do you see the predictions for dollars per watt residential and CNI?
In terms of panel prices, I think they'll probably hit a bit of a floor over maybe the past year or two. They've obviously come down in the past couple of years, sort of 300–400%. But it does appear that they've hit a bit of a floor. Obviously, there's a lot of back and forth going with the anti-dumping legislation and tariffs and so on. Even with that, panel prices did come up slightly towards the end of last year. I think sort of most companies out there are able to absorb that cost and sort of already factored in. So that's sort of for the panel prices. Inverter technology is moving along quite quickly. So inverter prices, particularly the move sort of towards string inverters and microinverters is reducing sort of that part of the cost base. So that's what we're finding on the commercial industrial side. Residential.
Most of our panels and inverters are donated. So it's not, luckily it's not a big issue.
Just speaking from industry experience, I think I'd reiterate what Danny said, that module prices have kind of flattened out. And just speaking from experience with industry projections, I think they are expected to decrease moderately over the next 5–10 years. But I think the greatest increase in value proposition will be increases in efficiency. So for the same 70 cents a watt, you get a more productive panel over time.
I don't know, I think, to be contrarian a little bit, it's, with the ITC, probably isn't too much incentive on the industry, in the US at least, to bring down that price of equipment. You probably have string inverters that are, what, like 15 cents per watt, 20 cents per watt? But the microinverters are still around 30 to 40, even 50, right? And base is probably around 40 to 50. And so, I don't see the incentive structure aligned with the ITC, where the ITC says, generally speaking, the sponsors are allowed to take a step up on the fair market value, right? So if the cost to build, on the utilities side is probably $2 per watt, and on the resi side, it's still call it like $3 per watt. That $1 difference is the difference between the customer acquisition costs, also some of the soft costs that people have been discussing here in terms of permitting. But if you look at forecasts, I think people are saying if you have overcapacity, which we have, right? So a lot of the Chinese panel manufacturers were overproducing, because they were incented to do so in their country, like create jobs and the like. And if we get to the 16-17 period where the ITC steps down, we have 10%, and forecasts are saying that the solar installations are probably going to be level in 17 vis-a-vis 16. You probably won't have that, So in 17, people are using less solar panels, and companies are ramping up today to meet the 16 demand that people are forecasting. And if solar demand does decline, you probably will have the reverse again. Companies were trying to were trying to maximum or optimize the supply and demand. But now if you have the flip where you have more supply, prices should come down. And so with this 10% or the step down to 10%, I could see the argument that people will try to bring costs down further. And if companies can more further optimize the vertical integration of their business and try to optimize the cost, we should be able to get down below $2 per watt even on resi. Right? I just don't understand why we have a difference between utility scale and residential. I see the difference because of customer acquisition and the like, but anyways, because of that question. So.
Yeah, there's a question related to that view on pricing coming down to overcapacity emerging. What is the U.S. Demand versus global demand for solar? Because I mean, you're talking mostly about the 2016 issue is a U.S. phenomenon, is independent of what happens in Asia or in Europe. I mean, obviously Europe's softened recently, but what is U.S. demand versus the global demand, and
yeah, I
how does
think
that
off the
affect
top
your
of my
thinking?
head, I think it's less than 20% in terms of CAGR, U.S. versus other countries. I think if you look at where the new markets are, it's probably like Japan.
Yeah, Japan was at 7 or 8 gigawatts last year, I think, or in 2013.
Yeah, well, Japan, that's what I'm saying. Japan, because of that FIT program or the tariff program that they have in place, Japan's market is probably where, I mean, a lot of the developers are going there. The big developers are going to Japan because of the program that they have after Fukushima. But I think if you look at China and sort of Southeast Asia, that's where people are forecasting you're going to have the most boom. And when you talk to developers who are in Thailand, Malaysia, and Southeast Asia, they're talking about prices that are far below the U.S. prices. And so that's where I'm going. That's why I say, why are we $3 in resi here in the U.S., $2 utility when you go to China and other countries? Obviously, labor costs are different.
It's also
they're probably paying less for panels too.
I think it's also the soft cost when you have a feed-in tariff type of a model, and it's kind of backed by the government, like in Germany and other parts of Europe. In effect, it makes it easier for loans to be issued, and people are coming to the developers as opposed to developers seeking out potential opportunities, which tends to bring down those soft costs.
Yeah, but I mean, I'm hearing anecdotally from my colleagues who've been to India. For instance, India's cost of debt is 12%. There's no tax equity structure there, obviously, and so you probably have like a 75 to 25% debt to equity structure to get these systems built in India. So 12% cost of debt is far higher than what you can get here in the U.S. And so, I think, your argument's right, but I think, it's all dependent, and it's a mix of hard costs versus financing costs, and how expensive is it to get a customer, etc.
I can provide you guys with, we're based in Toronto, Canada. We have a unit tariff market. We have a strong residential and commercial business internally. And we're building, our cost to build residential in Ontario is under $2 a watt. And we're pricing, most of our equipment comes from the US at US prices. I mean, now we have a bit of an exchange rate issue, but we're building residentially for $1.90 or so, and a lot of that cost, and we have a residential business based in Massachusetts where our costs are above $3 a watt. And most of that we attribute to just the soft costs, the financing costs, which are higher, buying down debt, or the interest to the customer direct. And on the commercial side, we're building around $1.80, $75.80 for systems between 100 kW to 700 kW.
Chris, I'm wondering what new financing vehicles there are in the market, and whether any of those newer financing vehicles would have an impact on the cost per watt of solar, going forward.
Yes, definitely. I mean, recently there's been a vehicle called the Yieldco product that a lot of big developers companies have created. Like NRG started the first NRG Yield, and then now we have two Yieldcos who are trying to put distributed generation or residential solar into their Yieldco. So NRG Yield, they've announced it. Sun Edison, they already have distributed generation in the Yieldco vehicle. They've announced that one of their growth budgets is resi solar. So there are vehicles that are in the market. So Yieldco, what it does is it pays investors a dividend, and a growing dividend. So it's like a master limited partnership that you have in the oil and gas space that have been around since the 70s, that the federal government allowed for the oil and pipeline companies to create to develop the infrastructure. And so now we have a YieldCo product, which is not federally mandated. It was created by companies and banks. And we worked on NRG Yield, the first YieldCo. What we did was we said, let's take the contracted assets, pay people a dividend, which attracts a lower cost of capital. And that's been very good for the renewable space, because what you've seen now is big companies looking at development assets and looking for assets that are operating that can pay or that can generate stable cash flows to pay a dividend to investors. And those types of products are very good for this market. And so I know a lot of developers are obviously excited about developing their own projects so that they could sell to a YieldCo, or they could sell to other companies.
Yeah, we work
but
with
then it's
them.
also creating sort of a market to aggregate more and more of these assets. And smaller developers obviously have a harder time attracting financing. And these YieldCos allow developers an option to work with them, whether they sell them or maybe there's a way to partner with them, to have a company that can actually take these assets and be efficient in the markets. So that's one avenue. The other market is a product called securitization, which has occurred already, where what you do is you take a lot of different assets that are very alike, like mortgages, for instance, which have been securitized for many, many years, where you can aggregate all of these assets and attract investors who like, again, the yield, the coupon payment that they get every month or every quarter. So you're again attracting a lower cost of capital. That's a debt product, and that's obviously a lower cost than other debt products that you get in the bank market. So there are different ways that people are coming up with to attract investors who can deliver the low cost of capital that helps everybody build more projects.
I had heard at one point also that there was some talk about having a renewable energy investment trust similar to real estate REIT. Is there anything going on in that avenue?
The regulatory. I mean, I do know of it. The REIT structure has been around for many years, allowing real estate companies to attract the dividend-wanting investors. And the YieldCo product is a synthetic MLP, synthetic REIT structure. And so we have a product already out in the market that can generate the tax attributes, because renewable assets generate the tax attributes to be able to offset the taxes. And so all of these YieldCos have tax shields of 10 years or longer, meaning that they themselves don't pay taxes. And then when the dividends get paid to the investors are also benefiting from an advantage tax structure, meaning that they're paying dividend level taxes that are on return on capital. And we don't have to go be that technical, but the REIT structure could be useful, just like if the government were to allow for renewable assets to be MLP-able or eligible for an MLP structure. That could be very useful for the industry. But right now we have ways for developers to put renewable assets into a company that can be like an MLP or a REIT. But I think right now, I know the senators have proposed changes to bills, but I think right now there's probably very little momentum. And Obama has obviously put into his bill making the 30% PTC or the 30% ITC and the PTC extension more permanent. But I don't know if those changes to laws are going to happen, right? And so I think most people are assuming that these extensions won't happen and that the 16 period will come for solar.
Right.
Actually, you just answered one of my questions that I had was, what was your gut feeling about it? Because, about 6 months ago, I wasn't really sure what was going to happen at the end of 2016. But it looks like it's set in stone that for the residential, the 30% is going away. But the 10% is only for commercial? Is that what it is? Correct. So it's definitely only 10%?
Yep, correct.
Right.
And that's, so the step down will happen on 31st of December, and it's systems that are in operation. So if you're not operating on that date, then it's going to go straight to the 10%.
Got it.
And that's that's the way that's what we're advising everyone. Hopefully there may be some kind of step down like what happened in the wind industry. So as an industry, we're sort of working towards that. We sort of have our team of lobbyists out in Washington, but we're only working with what we have at the moment, which is a step down from 30 to 10.
Sort of generally, as a panel, what do people think the impact of the end of the or the reduction of the ITC and then the end in the residential market is going to have after 2016? What are you looking forward towards as an industry? How do you think all of this is going to impact the industry in the U.S. and in the tri-state area?
It's going to be really bad.
Yeah.
You're going to have a lot of companies fold, and what you'll have is further consolidation in the business. So right now you have companies like Solar City, SunPower dominating residential, commercial, utility scale with First Solar. And especially in the down market section of the market, residential and small commercial, it's going to be blood and carnage. A lot of these smaller installers, the ones that rely on a few megawatts per year, they're going to be out of the market because they're not going to be able to finance these strategies. Or the end market or the project level finances to their customers is going to look a lot worse, and they're not going to be able to come to market with some prepackaged strategy that's supported by a yield curve that's paying a 3% dividend. Those companies that have that, so like a SunEdison and some of these utility players, they'll still be there. So you'll have dominance in the big companies if 2016 occurs. And there'll be blood on the street in terms of all these smaller installers.
Yeah, look, we're very positive. I think agree with Jonathan though. There's going to be some consolidation in the industry. I think it's going to be sort of like the herd mentality that the weaker companies are going to sort of fall by the wayside. But that's something that's going to be benefit to the end consumer. Overall, there's going to be a little bit of up and down. It's probably going to be a little bit quiet initially until the market sort of balances out in terms of the installers, the developers. There's talk that the rec market will probably take a bit of a jump because the demand will come. What's being built is going to come down. So there'll be a bit of a consolidation there. That we're overall very positive. There's still a very strong future for solar. And then there's a strong need. It sort of comes back to this demand for solar, this need for distributed generation, in terms of security, energy security, and energy balances.
I like the trend in the market. I like that a lot of the companies that are focused on bringing down costs. And I think if we're in the region, as one of the attendees mentioned in terms of the $1.90 per watt in terms of cost, I think when we've done some work around this, where if you have low cost, you should be able to still have an economic system. And so if we can bring down costs and sort of weed out a little bit some of the fat in the financing structure, including including us as a tax equity investor. Tax equity guys are not going to expect lower returns. They're going to probably expect similar or maybe even higher type returns. But if you can have cost structures that are very low and utility prices continuing to rise, so that solar companies can still continue to compete as an alternative, right? Delivering a value proposition to the customer and say, hey, you can save money over the life of the system. I think you could still have a pretty robust market. I'm just negative that the ITC is probably going to sort of be the smoke and mirrors where people say, just like in the PTC, where the wind industry, where wind assets were literally non-existent. When was it? Like in 2013 or so, when the PTC expired. You probably had, if you looked at the numbers, you probably had like this, dramatic decrease. and people were following the market, right? And so all investors are already aware about the step down, and so everybody's pretty positive about 15. 16 people obviously are going to be positive, but I think, you know, unless we have some certainty, and the certainty is going to be the step down, then people can forecast it. But if it's uncertain, or people kind of waffle and say, hey, we may have the 30%, we may not have the 30%, then creating that uncertainty is just like in the wind industry, where then people are probably not going to want to invest. So hopefully we can have some certainty where there will be a step down, and companies think about, you know, cutting down the fat in this cost structure, then maybe we can sort of have a more smooth transition into the 17 period.
So the good news for us is that we haven't really begun to use the ITC, but the bad news, of course, is that we're just beginning, and it will be a significant offset in each of our installations. And so yes, it'll be a huge problem, challenge for us in terms of that's that much more money that we have to raise for the installations. I think the only way to offset that is to have state and national low-income solar programs. The thing that's not mentioned here, because we're talking about the financial case, is the environmental case. And the communities that are most affected by greenhouse gas problems in the U.S. And other environmental challenges are low-income communities. So the more solar you put in it, the better the offsets are. So both environmentally and economically, it really behooves us to think about low-income programs, both statewide and federal. I mean, it's federal probably will be a few years away, considering where we are in terms of the impasse we had before. But I think it's something that the industry needs to begin to support as well. If we believe renewable energy should be accessible to all, certainly to the grid, then there have to be some other offsets, because low-income people have never been able to utilize the ITC. So it's nothing new for low-income people, but if you're going to make solar accessible, we've got to talk about something to replace that for those communities.
Nice to end up being last. I don't chime in that much more than what's already been said. I think we, you know, on the residential side, the trajectory is strong, but obviously there's a rush behind it. So I think the hope is that we, by providing residential financing products to our smaller installers, that we're giving them the tools to try to, you know, grow and strengthen and enhance their own operations, such that they can achieve some sort of escape velocity, so that they are not the flood on the streets. But you know, it's difficult, and at the end of the day, it kind of comes down to a personal level. Like, do you want to be the kind of a group that gets your act together and kind of like understands that at the end of 2016 it's going to be a very different world, or are you content to reflect on how good it used to be? You know, when your firm used to be cash purchase and you were the only game in town. And I think a lot it's going through the stages of denial, and it's very interesting working with contractors and trying to help them understand the financing that we offer them and the tools available to them, and note on a weekly basis like that, you know, there is a massive movement towards financing and a massive reduction in our state rebates, let alone federal ITC. That's, you know, on the horizon. So it's a challenge, but you know, that's I think why the Green Bank movement is so exciting, is that there's an opportunity to provide those tools.
Yeah, if I could just add, I do think that with if the step down happens, the industry will definitely survive, and it should continue to grow. It'll just be reformed. You'll have a lot of consolidation, and the blood will be that of these smaller installers. So it depends on how you view that. It actually might be a good thing for the industry longer term, to be a little controversial. I know the installer community, a lot of them, because it's a business that doesn't require a lot of barriers to entry. We're talking about barriers to entry of this market, right? You can be an electrical contractor, get into the solar business very easily. And that's a discussion, you know, you could start doing projects and develop a website and you're in the solar business. When the project economics become more challenging and it behooves you as an installer to develop and deliver a financing solution less people are going to be able to sustain that business model. So,
Do you think, follow up on that, the jobs, all the people who are working for the small installers are likely to get jobs with the larger ones when this consolidation takes place? I would assume that would be the case. I'm nervous about that because there are a lot of guys working out there.
Maybe some of them.
You gotta have the say
some of them, yeah, not all of them, no.
I mean, the small business owner is going to be in trouble. They'll be making less money, but the many people who work for them.
Yeah, I'd say 70% of small installers do what they call lights on pricing. They price the project so they can keep the lights on. They're not really making a lot of money.
Right.
And they're buying into the hockey stick and the upside that, hey, I'm going to be a solar entrepreneur. After 5 years, I'll hit that hockey stick, and then my ticket will be punched. But that's going to go away. So I think they're not all going to be hired. Because what do these large companies need? They need boots on the roof, engineering talent. That will be outsourced to India. There's a lot of ways that they can squeeze that orange to get all the juice out for their investors. And it's not necessarily going to be paying guys more or hiring more headcount.
I think the facts are friendly, right? I mean, there are a lot of good things happening. Companies are changing their models. NRG, they recently announced how they're restructuring their businesses. They've created a renewed business, a home business. He's talking, David Crane, the CEO, is talking more like a tech company than a power company. And then they're financing vehicles that are bringing down the cost of solar, cost of wind. There are also, companies that are trying to bring down costs, right? Automating, whether it's through the racking technology, right? It's SnapRack or Zep Solar. Racking is becoming more efficient. Solar panels are becoming more and more friendly for roofs. Inverters are becoming more and more friendly for distributed generation. Right? They don't have to be so big. They can be smaller. They can be on a panel. Right? So technology's moving. Then there's also, just the complete more acceptance amongst the public and people about having solar on the roofs. It's not as aesthetically pleasing, obviously, as not having solar, but it still doesn't look that bad. And then companies are thinking about making it more aesthetically pleasing, kind of blending in more. And you also see home developers, builders like Lennar and Pulte Homes and these types of companies that are building new homes with that ability to just make the solar panels go into the roof as opposed to indent it out. And so there are a lot of different changes that are coming, and we've got a lot of time, through 2016 to see this development. But again, I think it comes down to just purely cost and making it more economic as opposed to using the subsidies in place and incentives. And I don't disagree at all with having incentives for low income and making alternative energy more accessible to all. But I think in the industry itself, for everybody else, maybe it is good to have lower incentives and making it more competitive against on just cost basis as opposed to, it's competitive with subsidies.
So, Chris, you just answered what was going to be my last question, but I'm interested to ask it to the rest of the panel, which is, what are you looking at in terms of technology improvements, and to what extent do you think those improvements are going to be important both to the industry, but also, and I would say when we're talking about technology improvements, I'm not only talking about panels, but and possibly getting more generation out of the same amount of space. So in other words, a more efficient panel, but also the extent to which the inverter solution can be useful to providing reliability, which I think is it's not just cost savings, but also post Sandy, the move towards distributed generation, providing reliability both to individuals and businesses as well as to the system. So I don't know whether anyone else has a comment about how technology can impact that or what they're seeing, but I think that that to me is an interesting question.
Could I tack something onto that?
Sure.
Once they jump on that, we got to keep it quick. 'Cause we have to
Yeah, sure.
kind of see network.
Well, this might slow it down, but I'm really interested too in any reflections about how technology would impact workforce. And do you think it's inevitable that even though the amount of the rate of solar may increase, that actually workforce would flatten out and even decrease?
I think from what I've seen, the core technology is pretty stable, and there's been incremental gains in efficiency on both the module as well as the inverter. Most of the innovations occurred in the racking space. So different applications, from single axis, dual axis trackers to different mounting solutions. That's where a lot of the innovation is going to occur. The form factor, the microinverter has already been in place or is been developed. You might have an AC module that makes implementation even easier. But that is the extent of the core technology. It's really going to be where you put the stuff and how do you capture more resource. So that could impact workforce because people have to have expertise in how to actually implement these different applications in different areas of the built environment.